Hello and good morning. I am Kenny Polcari, your host of the party, and today is Monday, March 20th, 2023, and look where I am. I'm back home again here at the New York Stock Exchange as I'm hosting a group from the University of Wisconsin today here at the exchange to talk about capital markets and market structure and trading technology and all the good stuff that makes the U.S. capital markets run. Anyway, today is Monday, March 20th, 2023, and there is a whole lot going on. So let's get right down to it, right? As you know by now, the Swiss government pulled an emergency shotgun wedding over the weekend, convincing UBS to take Credit Suisse for a $3.8 billion deal, right? That deal came on Sunday evening after an anxious weekend, right? The Swiss National Bank providing $100 billion to help facilitate the deal while providing another $9 billion to protect and backstop UBS against any losses that they may incur. Credit Suisse AT1 bondholders getting wiped out, threatening to send a $275 billion market for bank funding into a tailspin. Equity holders got saved. Fixed income managers in an uproar, as many point out that bondholders usually have preference over equity holders in the pecking order, saying the Swiss have killed this key corner of the funding for lenders, leaving the global financial community on the edge of their seats. Prices of AT1s in Asia getting slammed overnight. Global asset managers trying to access what exposure, if any, they have to these AT1s. AT1s are an additional tier 1 security that can absorb losses when the capital of the issuing institution falls below supervisor determined levels. They were created post the great financial crisis. They impose principal losses on creditors and in theory have no recourse to the public purse should there be a bankruptcy. Buyers of these securities knew the risks going in, and if you continued to own them going into Friday, then you also understood the risk of a complete loss if Credit Suisse was taken out over the weekend. In fact, it was. But many never expected the risk to be realized. They expected the regulators to save them. So expect lots of screaming and yelling in the days ahead about the AT1. Stocks around the world were under pressure. Asian markets all ended Monday low. Hong Kong down 2.6%. The Nikkei down 1.4%. Australia down 1.4%. And China down 0.5%. When European markets opened, they opened all lower as well, down more than 1.5%. Banking stocks getting whacked. UBS down 12%, Credit Suisse down 64%, Deutsche Bank down 10%, Commerce Bank down 8%, Barclays down 8%, Unicredit down 5%, Intesa Sanpaolo down 3%, BNP Paribas down 6%, Societe Generale down 7%. You get the picture, right? It should be noted that as the morning sun moves across the sky, European markets, though, and some of the banking stocks outside of Switzerland are in fact rebounding as investors find opportunity, reminding us that in this chaos there is opportunity. At 5:30 this morning, all markets across the Eurozone had rallied back and were now down about 0.5% and appear to be improving. U.S. banks listed in Europe all under pressure, and U.S. investors brace for another rocky day in the markets. This morning at 4:30, U.S. futures were all down across the board and big. Dow futures were down 350, S&P's off 40, the Nasdaq was off 90. The Russell was off 25 points. This on top of the losses seen on Friday when the Dow lost 360 points. The S&P was down 44, the Nasdaq down 88, and the Russell down 45 points while the transports gave back 190. But again, as trading gets underway, we've seen the broader tone improve. Banking sector, though, remains under pressure, yet U.S. futures are now decidedly a little bit higher, right, as they attempt to rally. At 5:30 this morning, U.S. futures, while still low, have rallied back significantly. Dow futures only down 90, the S&Ps were down 7, the Nasdaq down 3, and the Russell down 2, and it continues to improve as the day dawns, right? So expect lots more volatility, though, today. Central bankers around the world are rushing to restore confidence and stability to the system. The Fed and 5 other central banks have already announced coordinated action to boost liquidity in the U.S. dollar, the dollar swap market, to help ease the strains on the global financial system. This week is the Fed's rate decision, right? Now front and center, with many now saying that that this latest crisis will force the Fed to do nothing. Something that I do not think is possible. My gut says that they have to move to convince everyone that inflation remains their mandate, right? Their first mandate and their first concern. And zero move might suggest that the global financial markets cannot handle it. A message I don't think anybody wants to send. Fed fund futures continue to suggest the Fed will raise rates by 25 basis points on Wednesday in an attempt to make it clear that inflation remains their focus. But what happens next will depend on the language he uses and how he delivers that message and how the markets hear that message. As you can imagine, the move into the safety trade is alive and well. German and UK bonds are higher. US Treasury prices are higher, sending yields lower. The 6-month T-bill is now yielding 4.36%. Remember, only 2 weeks ago it was near 5.5%. The 2-year is now yielding, fell 13 basis points, now yielding 3.69%. The 10-year is down 11 basis points, yielding 3.31%. And gold? Oh yeah, that surged up and through $2,000 an ounce, ticking as high as $2,031 an ounce overnight. Morgan Stanley's Mikey Wilson, feeling vindicated, tells us that the stress in the banking system marks what's likely to be a painful and vicious start to the end of the bear market in the U.S. stocks. He sees that the backstopping of risk and bank deposits in the U.S. as a desperate attempt to calm the markets, causing many investors to go risk on, right? As they see it as a form of quantitative easing. He, on the other hand, will argue against that and say it is not that at all, and argues that it will kill credit availability, squeezing economic growth in this country. Saying that the S&P will remain unattractive until equity risk premium climbs to as high as 400 basis points from the current 230 basis points. Now look, equity risk premium is the excess return earned by investors when they invest in an equity market over the risk-free rate, right? So you have to think treasuries. The excess return compensates investors for taking on more risk and changes over time as the market risk fluctuates, right? In times of stress, the risk level rises. Gavish? Okay. Oil, that's next, and that's coming under pressure too as the global banking system unfolds, and demand destruction is all the conversation. Our friends at Goldman, who only 2 weeks ago told us that oil was going up more than $100 a barrel, now tells us that they only see it going to $94 a barrel, saying that, and I quote, oil prices have plunged despite the China demand boom given banking stress, recession fears, and an exodus of investor flows. Historically, after such scarring events, positioning and prices recover only gradually. So they took their price down $6. The decline in prices, though, in overall prices, is forcing the Saudis and OPEC to meet in Riyadh to discuss what their response will be to the crude prices in decline, right? Stressing that their commitment to decision made in October to cut production by 2 million barrels per day until the end of 2023 remains intact. The question now is, will those production cuts be revised higher, right? Delegates of the group have said off the record that they are not considering any change until the financial markets settle down, something that investors should take with a grain of salt. This morning, West Texas Intermediate is trading down $1.50 at 65.26 a barrel, a level that represented resistance in July 2021 and then support in December 2020. So this is a key level to watch. A failure to hold here could see oil potentially decline to $60 a barrel. The next official OPEC meeting is April 3rd, and word is it that they're monitoring the situation very closely to decide what's next. Remember, the sweet spot for the Saudis is $80 a barrel, which is a 21% move up from where it currently is. Eco data this week, besides the FOMC meeting, includes existing home sales expected to be up by 4.8% month over month. New home sales, though, are expected to be down 3% month over month. S&P manufacturing PMI of 47, which is in contractionary territory, and S&P services PMI of 50.2, which is just slightly in expansionary territory. And remember, the U.S. economy is a services economy. The S&P closed on Friday at 39.16, down 44 points. After testing a low of 39.01. It feels like it is a risk-off day, but we know how that tone can change depending on the headline. Last week we saw us attempt to rally, and we tested trendline resistance at 39.55, and we failed, right? We failed to pierce up and through it. So this morning's weakness suggests that we could test 3900, but if the U.S. banking headlines continue to show stress, a move lower would not be unexpected, right? We remain in the 3,800, 4,050 trading range, so there's plenty of room for day traders to make some money, and there's also plenty of room for long-term investors to look for opportunity if you have a strong stomach. Remember what I've been saying, in the chaos, there is opportunity. Okay, so what do we have for dinner tonight? We're having the Shrimp Francese, right? So this is a simple dish to make, but it always presents beautifully. For this, you need 1.5 pounds of large shrimp, cleaned, deveined, and butterflied. You need 4 large beaten eggs. You need olive oil, butter. You need minced garlic flour. You need a 3/4 cup of dry white wine. You know me, Pinot Grigio Santa Margherita. You need chicken stock. You need 1 large lemon slice. You need a salt and pepper and flat leaf Italian parsley that you've kind of chopped, right? You want to set up 1 bowl with the butterflied shrimp, 1 bowl with flour, and 1 bowl with the beaten eggs, and some of the parsley mixed into it, right? You want to heat a large non-stick pan to medium heat. You want to add some olive oil and 1/4 stick of butter. Let it kind of melt, right? Now you want to dry the shrimp off with a paper towel, season it with salt and pepper, then dredge it in the flour, and then dip it in the egg wash, and then add it to the pan that's got the butter and the oil in it, right? Don't crowd the pan. You're going to do this a couple of times. You want to work it in batches, right? You can always add more oil and butter as you need it for the subsequent batches that you're using. You want to saute and fry the shrimp for about 1 or 2 minutes per side, and then place it on a paper towel or a wire rack just to drain, and repeat the process until you're done. When you're done, just empty the pan, wipe it clean with a paper towel. Don't wash it, just wipe it clean. Now add back another 1/4 stick of butter and the garlic. Saute for about 1 minute. Next, add 3 tablespoons of flour to the pan and whisk it over the medium heat until it's nice and smooth and it's all incorporated with the butter, right? Now you're going to add the white wine, turn the heat up high, bring it to a boil, continue to whisk it, let the alcohol burn away. Now add the chicken stock, about a cup of chicken stock, and the lemon juice. Again, bring it to a boil for 1 minute while you're whisking it, right? Now turn the heat down to medium-low. Taste the sauce, make sure it's okay, adjust it with salt and pepper if you need to. Now, you want to take the shrimp, you want to add back the shrimp to the pan along with the lemon slices, put them right on top, and you're going to take a spoon and gently coat the shrimp with the sauce that you made, right? You want to heat this up just on medium-low for 3 or 4 minutes, and then you want to serve this, right? And then you want to serve it. Now you can serve this over white rice. You can make a linguine and serve it over linguine, or you can just make some Italian toasted garlic bread and just serve it in a bowl with some of the sauce, with the garlic bread, the glass of white wine, the Pinot Grigio Santa Margherita, and it's a perfect dish. You want to make it more substantial, then put it over pasta or rice. In any event, you can use it as an appetizer, you can use it at dinner. And here we are at the New York Stock Exchange today, and it is going to be an amazing day. So until tomorrow, take good care.